HCLTech just dropped its Q1 FY2025 results, and the numbers reveal a mixed bag. A surprising 10% dip in profit despite steady revenues, and a 12 Indian rupees dividend declaration. In today's screen-recorded review, we're diving deep into the real story behind these earnings using data and analysis from Financial Express and Money Control, unpacking what it means for shareholders, analysts, and the broader Indian IT sector. Let's start with Money Control, which reports that HCLTech's consolidated net profit dropped to 3,843 Indian rupees crore, down from 4,281 Indian rupees crore in the same quarter last year, a clear 10.2% YOY fall. We'll highlight this directly on their earnings snapshot table during our screen recording. Despite this dip, the company posted a 2.1% YOY growth in revenue, reaching 26,296 Indian rupees crore. What's behind this disconnect? The answer lies in rising costs, softer margins, and shifting demand cycles, all of which we'll visually unpack from both sources. Moving to the EBIT margin, which has long been HCLTech's strength, it has now contracted to 17.7%, which is slightly below both street expectations and last year's figure of over 18.3%. This is where Financial Express adds context, quoting industry analysts who suggest margin pain may persist into Q2 as well, largely due to higher subcontracting costs, moderate deal ramp-ups, and increased onboarding across global delivery centers. We'll screen record this analysis to give you a clear picture. On the other hand, HCLTech tried to soften the blow for investors by declaring a 12 Indian rupees per share interim dividend, which signals continued confidence in long-term cash flow. This is the 81st consecutive quarter of dividend payout. We'll show this historical record from their investor relations site during the video. Let's now analyze the vertical-wise performance. According to Money Control, financial services and manufacturing verticals showed muted growth, while life sciences and healthcare contributed most significantly to top-line expansion. The America region, which makes up over 60% of HCLTech's revenue, saw low single-digit growth, while Europe showed slightly better momentum, a trend we'll highlight in charts. For those asking, is this a red flag or a temporary blip? Financial Express quotes analysts from Kotak Institutional and Axis Securities, both of whom see the Q1 miss as manageable but not entirely priced in. In other words, investors should brace for continued volatility, especially as discretionary tech spending from U.S. clients remains subdued. Another point to note, deal wins. HCLTech signed $2.1 billion worth of new deals this quarter, which is encouraging, but slower than some peers like TCS and Infosys. The company's leadership, including CEO C. Vijayakumar, remains optimistic. We'll screen record the CEO quote where he says, "Our strategy continues to deliver growth, though macro uncertainties remain." From a shareholder perspective, the company's EPS, earnings per share, stood at 14.15 Indian rupees, and the stock fell nearly 2% post-results announcement, which we'll show using live stock data from NSE or BSE. Let's also touch on guidance. HCLTech maintained its FY25 constant currency revenue growth guidance at 3% to 5% and operating margin guidance between 18 to 19%, which some analysts see as conservative in light of the Q1 dip. Financial Express emphasizes that margin recovery may take until Q3 unless cost optimization and automation efforts kick in faster. For retail investors, this signals a medium-term holding strategy, not an aggressive buy unless the next quarter shows rebound signs. The video will also include a recorded visit to their official investor relations page, where viewers can download the full earnings PDF, press release, and presentation. We'll highlight key numbers: attrition rate, down to 13.2%, headcount changes, net addition was minimal, and client metrics, especially how the number of $100 million plus clients remained stable. In closing, this Q1 report paints a picture of a stable but pressured giant, facing the same global IT headwinds as its peers: soft demand, pricing pressure, and cautious clients. But with a strong dividend payout, modest deal wins, and long-term digital bets, HCLTech still remains a resilient mid to long-term IT bet. As always, this is not investment advice, But if you're an investor, employee, or just curious about India's IT sector pulse, this breakdown gives you all the facts. Drop your thoughts in the comments. Is this a buy-the-dip opportunity, or would you wait for Q2 clarity? Don't forget to like, subscribe, and hit the bell icon for more result-based reviews, stock updates, and financial analysis, all with real-time sources and on-screen guides. Let's keep your financial awareness sharp and fact-driven.